Everything you see here is strictly informational. This is not a channel for you to be taking financial advice from. I am not a financial advisor. I am not a broker. I am just a person that is here recording my journey about learning the markets along the way. So please do not consider me a financial advisor. Do not risk any more money than what you have. Do not be borrowing other people's money. Do not do anything stupid that you're going to regret later with your money. Hey guys, what is up? It is me, Ted, here with a different type of episode of Bodies and Wicks. I'm going to be doing a very specific one this time, not much analysis. I'm going to be doing a how-to. I'm going to show you how to win a lot of trades on the SPX, S&P500. It may show up as US50, depending on how your broker is. But the reason I'm going to show you this is because that's what I've been doing lately. And, before, you've probably been following my videos. If you have, I've been subscribing to gurus or, people that are sending signals through, Telegram channels. Whether it be, I think it's clean pips or pips or pips win or Wizard. I talk about him quite a bit. There's just been some others. Some other people I found on YouTube that have some free channels like Ronan and I don't know, just a couple others. But I was coming across that I didn't really have much of a strategy. I was just kind of, throwing low lot sizes at basically every trade that was being thrown in a Telegram channel to see what would stick. And it's not a good, really not a good idea, to be honest, because a lot of the trades conflict. Somebody will be saying sell, GBP USD, while another will be saying buy GBP versus, the euro, which that's usually not a good idea, because if GBP is gaining strength, it's going to be gaining strength. It'll probably go against both the euro and the US dollar. And so I just kept, making these trades, and I don't want to talk badly about one person in particular. I'm not going to talk badly about him. He can trade good, but unfortunately, Mr. Wizard, the indices that he trades, he'll give a decent signal, but then it changes, right? And it'll change while I'm asleep, and so I'll wake up to something negative, and that's not the point of a signal. I mean, it's one thing if you're live trading, tell me you're going to live trade, right? But don't throw out a signal and don't say anything for hours and then come back later right before it hits and be like, move it back and do this and do that. And, it's just like those kind of things that really, it's really not worth paying $100 a month for if you're going to be constantly changing, signals, especially the ones that are supposed to be your money makers. And I got to the point to where I just started putting my entries as his stop loss, and sadly enough, those are the ones that started making me money. But that was a couple weeks ago, and this past week, I kind of brushed myself off, and I took a look. I said, what? I'm pretty sure I can do this by myself. If you've been watching me, I'm not not a pro by any means. I've only been doing this since May. But one of the things they tell you at the beginning is, just stick to a couple pairs, and that's one thing I didn't do. I never stuck to a couple pairs. I was always just hoping that everybody was right, throwing me a damn signal on a Telegram channel, and I'd be making millions by now. But tough love, that's not the case. You're not gonna make money like that. But this past week, I did end up growing my account by a very sizable amount, largest I've ever grown it. I didn't take one trade from a single Telegram channel, and I only used one indices, right? I used SPX, right? So I'm going to show you how you can use SPX as well. First, if you're wondering what is SPX, or the S&P500, if you don't know, you can wiki it. There's quite a bit of information on it. Basically, it's the top 500, and I think it's 505 companies that are supposed to best represent the United States economy. I think there's people that that control who comes in and who comes out. They do rotate. It's not always the same companies. It's that way. It's meant to be the best for your economy. People directly invest in it, by using an ETF, a SPY or something like that. But we can also trade it, and that's what we do here with our MT4 app. So if you don't have Metatrader 4, this is going to, you should download it, because that's what we're going to be explaining, how to trade on MT4. If you don't know how to trade on MT4 yet, I suggest you get a demo account, and you can practice a lot about what I'm going to teach you before you get comfortable and get into it. So before we get into it, let me see here. I do want to explain a few things, so let's head on over here. So probably asking me, why the SPX, why not gold, why not the Euro USD, why not US30, why not any of those other things? Well, for one, it's actually probably one of the lowest volatility indices that are out there, so it's great to learn on. There are big and sudden moves and whatnot, but it's nothing, especially if you're beginning and you have a small account. It shouldn't completely take you out of the whack unless you're really not paying attention and you really don't know what you're doing. If you're going to be trading the SPX, you should have at least a very good basic knowledge of the market and how it works. You should at least know what support and resistance mean. You're definitely going to need to know what that means, actually. You're going to need to know, channel trend lines. You're going to need to know basic Elliott wave, pullbacks, harmonics. If you know harmonics, this might even help you a little. Just pretty much the high standard basics is pretty much all you need to know. Number two reason why I like trading the SPX is there's a low barrier to enter, right? So for me, I'll tell you what I use. I use Hugh as way. You can enter a trade at $20 with a 0.01 lot size, right? I mean, you better be dead on with your trade, because if you take that and you're going the opposite direction for just a little bit, they're going to take you out, because you're probably going to be at less than 70% of your margin, and they'll take you out on your own, and you won't be able to get that money back. And once you get below 10, or I think it is below 20, you can't trade the SPX. But that being said, you got $50, you got $75 or something like that in an account, and you can start hitting these trades. You can just start growing your account like no other. Another reason, my last reason, is that you really only need a couple of trades a day, to really start growing your account. You can hit those, especially if you're low level. So I'm saying this is for beginner people that have, are wanting to get into this market, and that are, don't have a lot of money. You know, but they hate, you know, playing the Euro USD, you know, throwing little 5-cent lots and, you know, losing 10-20 bucks all the time, you know, and trying to figure out where to go next and, you know, the next setup. Because I feel like SPX does have the best setups. I maybe that's just me because I can spot them really great. It also takes patience, and then after that, the execution, and then knowing when to get out. All right, so we'll be going through over all that. So let's head over to SPX. So let me get rid of this here. First, let me take a look and see what you guys can see. All right. So I'm gonna put this thing in my whole screen. So right now I'm in a 15-minute chart, whatever. I'm gonna go back to the 4-hour chart. What you want to do first, you want to look at SPX as a whole, right? You want to see at least within the past year what the hell SPX has been doing, right? Kind of get a basic understanding how it moves, that kind of thing. So as you can see, you know, if you want to know about the history of it, I can take you pretty far back. It's been, you know, there was I want to say a time probably prior to 2012, to where it just kind of went sideways for quite some time. Right now, I think we're still going back and back and back. We could probably do this on the week, and it would probably go a lot faster, right? Or if I did the month even. So yeah, here's what SPX looks like as far as back it is. I guess this chart will give me. Right, so here it gives me my what I was typing you earlier. I'll go ahead and get rid of all that. So started off really strong, it dropped, and then it, you know, basically has worked its way up, you know, throughout times. Like I said, sometime between 2012, you know, before that, didn't really have much going. I think that was when we had our financial crisis, right? And around 2008, dropped. Even though we had one recently, it, you know, it had its big drop too, but you know, it didn't drop. You know, the low of it didn't even touch the high of the last drop. So if that tells you anything, we're not really in much of a financial crisis. Now, how much of that is going to be propped up by the Fed? That's a completely different situation, a different conversation than what we're going to have today. All right, so now we know how SPX kind of moves. Its course, it's your typical, it looks like, you know, a typical index moves smoothly up and down. You know, you have your pullbacks, of course, and then you have your rallies. You know, you have your typical Elliott wave, you know, your 1, 2, 3, 4, 5. You know, so there's things like that. Now this right here, this is the interesting part because this is all COVID situation right here. And so that's why we're in such interesting times, and that's why honestly I think this is kind of a good time to be trading the SPX, because we're just now kind of getting back into that area. So if we were to draw like a channel, right, some kind of parallel channel, and let's go all the way back to here, go all the way back to this guy, and let's touch this. Interestingly, we're actually way below where we normally would be, but I think I also picked a bad spot because I picked what would be well, yeah, that was actually the very bottom of it. So that's at the very, very bottom of that. So we're still in the right direction. We've just expanded upwards. All right. So if we were to pick something a little bit different, here, let's go ahead and remove that. Let's just say we're gonna grab one of these. Oops, trend line. let's go with this trend line. Let's get this, and we're gonna go along this way. And it kind of looks like a little bit more of a channel than what we should be used to. I'm going to make this to a dash line, that way it's a little bit easier to see. So if we take that, we copy and paste it, we throw it on top. Alright, there we go. Now you have basically your SPX channel that has a couple different disturbances in it. Right, so this is technically your SPX channel that we are currently still in. Now that we've re-entered the channel, moves are kind of still being made as if they were prior to SPX, or prior to COVID, I should say. So if we want to get down a little bit deeper, we can get down with the 4 hour. And I actually remember this right here, this drop. I remember this is when I actually first started studying, or started learning how to trade forex. I started learning back in May. Right, I didn't really know too much about the SPX at all, but it was right around this time when I was really starting to pay attention to it and start watching it. And I remember that it was. And I was doing little bets here and there, throwing little lots here and there, because I was noticing it was growing over the day, but at nighttime it would drop. So I would set these sell limits for just like 20 pips, and they would always hit. So in the middle of the night, it would go through these 20 pips, and I'd wake up with $4 or something like that, But still, like I just started noticing weird things like that. We got to the top, and then boy, do I remember this drop, because I did not sell. I was too afraid to sell. I did not know what was even going on at this point. But that sell was, everybody thought it was going to stop here. It did, and it came back up, and then it just went directly and took so many people out, including me. So that brings me to my first point of learning SPX. Whatever you think it's going to do, it's probably not. It's going to do that and some. Just from watching it day in and day out, it has its own little tendencies, and I'm going to try to explain those to you a little bit more forward. Sorry guys, got my monster here. So that being said, moving forward, I'll just fast forward to this week. So this week starts somewhere around here. So first, the entire time as I'm doing this, right, what I'm doing as I'm going through this, I'm always marking spots where I can see that are support and resistance. Always mark those up. If it gets mushed out later, delete it. You can always come back to it. Maybe have it in the back of your mind for a different trade later, because support and resistance will eventually always matter. So when this first one came up and it went back down, what did I do? I would put a resistance line there, and then you had your support line down here, and I would consider this more support just because of what you have going on to the left. So you can match as many things up as possible. That is going to most likely be your scenario for your support and resistance line, right? This one you can probably pull it down a little bit just because it has multiple touches, and that would probably be your resistance line, right? So and then as we go through, I'll show you kind of how to trade these, and I'll show you specifically this week. So you go through, you see another one, go ahead and mark it. Why not? No, that didn't work. That didn't work either. As far as settings or as far as indicators that you want to have, there's a couple different ones that I like to use, and I use them for particular instances, right? One, I do have my RSI, right? Now, how I have my RSI set up is I have it set. My levels are at 29 and 16. So my inputs, length 29, close. I usually have this one. I put the upper band and the lower band different than the normal, the default, I guess you could say. 80-20, I'll usually put a little dotted line. That lets me know, because 70-30 is your normal, right? And then 80-20 would be, probably if you're getting into very, very high territory, instead of just knowing if it went over the 70 or below the 30, having that extra layer of, it's toward the 80 now, or it's toward the 20, it gives you a little bit more sense of how severe it actually is. So I like having the 80-20 there specifically for that purpose, so you can kind of see how far it is. You kind of have a measurement of how far it is oversold or how far it is being underbought. The next one I like to use is MACD. MACD I will generally only use if I can, because I'm very bullish in this, right? So generally when I use the MACD is if I'm going to be able to tell if there's going to be a drop soon, if there's going to be a change in momentum, right? And I'll check it on the 4 hour. The 4 hour is generally when I'll know if there's going to be some kind of change in momentum. So something like this where you have, the little bit of red comes back green, and then now it comes back red, and then it barely even tips the green. If you have two reds in a row tip the green, and your signals for some reason are still way above that are coming below, they're starting to come down, something tells me that we're going to have a dip, so to me at this point what I'm thinking right now in the SPX is that we're probably going to have some kind of a big dip. Even though I'm extremely bullish, I do think we are going to have a dip soon just because of things like that. But primarily what we're going to be focusing on is this through this, the whole green area, because that was this primarily most of this week, and that's how I were this past 2 weeks, and that's how I was able to make a lot of good trades. All right, so those are the two things I like to use as far as those kind of indicators. Other indicators I like to use, I'll throw this EMA on here, 50, 200, and then I'll also add in two MAs, which I need to do. Moving average. Oh, and just do it again. And then also a VWAP. And I'll show you why. Alright, so one of the MAs, so we already have the 50, we already have the 200. The next two MAs I like to use the 10. And style, I have the 10 is usually red. I like to make it red for some reason. And then the next one is going to be a 3. And that 3 usually I have as a blue. Yeah, I don't want to have the same blue as the. Let's go with a light green. Something like that, something I can see. I don't have these on here all the time. I'll throw them on there whenever I'm looking for a setup, or something may have changed, or if I'm expecting something to change. But generally this just kind of gives you an idea of the general direction of where it's going. Are we still in the uptrend? Yep, we're still in the uptrend. If it's doing one of these, it's coming down, it's getting inside of the 50, because the 50 is generally the one that's usually right underneath it, pushing it up. Generally, that tells me to either stay out of it or gives me a good area to where to look as to where to trade. So little things like that. Now, whenever I was coming upon, a couple weeks ago, toward the end of July, we made this little move, and we had had a call. We had the call to actually enter the trade right here, right, 32.58, something like that, 32 or 32.56, I want to say. And I was thinking, and the reason was, and I knew his reasoning. He threw a Fibonacci on it, right? And Fibonacci's are great in some instances. Sometimes they're not. But he threw a Fibonacci on this, right? And this was the second leg of the M. Come back here. Oh, I wish it would stop. Yeah, 32.47. So this Fibonacci was the 50, lined up exactly with, pretty much, this resistance. So he thought it was just going to bounce off this and go forward. Well, if you ever watch, really watch the S&P, whenever you see it move, you can tell it has a power behind it. So if you're going to start really watching and trying to trade SPX, just watch it how it moves in the morning. All right, watch how it moves just whenever you see these big, large, red, especially the bearish candles. Watch how it moves. It's usually like there's like a thud, almost, right? That's somebody putting in some kind of big order, selling off. You'll see a thud. You'll see a little bit of a drawback. Then you'll see like a thud. And you'll see a little bit of a drawback. And you'll see a thud. And you start seeing it do that, and you start seeing, okay, there's some power behind this, right? Once you start realizing there's some power behind this, I'm looking at this, what would technically, when you're looking at technicalities and you're going, oh, okay, well, yeah, it's at the 50 line, it's just right around the resistance, or or right around this area, which could be considered, support, which it could be because you have this line here. So this was the line, they were looking at, that was technically, I guess, a support line, probably like right here. So, enter in on the 50, you enter in safely before it hits this, before it bounces off. But I could just tell by watching it that was not going to be the case. So, and believe it or not, the stop loss was 30.26, I want to say. This was one of the instances where I put my entrance at 30.26. Which, as you can see, right around 30.26 is where they got stopped at. I did not. But that was just me watching it. I honestly wouldn't have known where to enter if I wouldn't have saw his stop loss. But I did know not to enter whenever he told me to enter, because I saw it just thudding and forcing its way down. All right, so those are the things you have to look for. You have to look for how hard these moves are, because these aren't, most of the time during the day you'll get stuff that's like, you'll get over here, and that's just consolidation. It's just kind of moving around. There's not really a whole lot going on. It's, it's not really going anywhere. Moving up and down, moves up and down. But then you get these monster moves, and then you got to know what to do, because these monster moves are going to be your chance. They're going to be your chance to know when to enter, right? And the best way to enter is either going to be on two different things. one, a support and resistance, probably one that's going to be a lot lower than what you're expecting, or two, a Fibonacci level, one that you're not expecting, right? It's not going to be the 382, it's not going to be the 50, right? It's going to be probably something weird like the 71, or if you have it flipped the other way, it could be the 11, or the 12.95. Those are like the levels that I see they go to all the time, where either they buy or they sell from. It's a strange thing, but it is. Now after this one, right? So we made this move sideways, right? So after we were doing this, right, as you can see, we have kind of this foundation. After I kind of make it a little bit more sideways, you can kind of see a foundation that was being laid through here, right? You see that support. So I started watching that, right? And after we made this trade, what happened is I did end up entering on this 31.26, ended up going right back up, right? And that's what it'll do. So once you enter on, once you find that perfect entry and it goes right back up, what you're going to want to do is you're going to want to close that trade, and it's probably as high as it's going to go, because it's going to turn right down and come right back down at you, right? That's one thing that I noticed. If you're ever watching these, right, and it has a really long wick, it is not going to be a wick for very long. SPX does not make long wicks most of the time. This, okay, that's this over here, that's a fairly sized wick, but like for these two right here, that they were not going to let these wick, and there's a reason behind that. And the reasons behind that is because there's banks in here. There's banks also playing with these. They're going to sell to buy, and they're going to buy to sell. So because of that, they're going to have a lot of their volume trying to push this down, and as soon as they're ready to release that, they're going to let it go and then turn around and sell and make more money than what they were, as if they were just to let it go here and then sell here. So they want to push it as far as they possibly can before they can actually buy again, because then they'll make more money. They're giving themselves more room. So knowing that banks are in play here, you have to think like them. You have to think, how are they going to play this, right? So as this continues on, I started to notice that it doesn't kind of look like a trend at the very beginning, but it is. This is definitely a channel, right? This is definitely a channel that formed, and this is what gave me a lot of money this week. I do want to change this really quick. I'm good on the gold part. I just want to change it to a solid line. Actually, I want to say it was this one, and then usually you want to do it to the first one that touches. I was doing it from here most of the week, and then what I'll also do is extend the line right. However, if it's interfering, that means that there's probably another candle that it can touch first. That's how I usually define the trend line, and it was this one, right? So that one happened for most of the week until I found another one, and they ended up kind of still staying within this channel. So and then the same thing with the bottom one, right? Took this one here. At first I did this until recently. Even with this, once you look at this on a 15-minute chart, let's go to 15 minutes. Auto. See, it was really as if almost it was hitting the bottom of this. So it was almost like it was still in that channel. But then I thought, you know what, it probably still was, trying to form in this channel. It just moved out for a little bit, so it was trying to find the channel, slipped out a little bit, and then it was like, oh, now we still have the same channel. So as you can see, the channel didn't really vary that much. It's still touching, just a little bit of a degree here and there can really throw a channel off. So that's why sometimes they have to be readjusted. So just always keep that in mind. Channels sometimes always have to be readjusted. Now, we're out of channel right now. We're not going to talk about that. What I do want to talk about is what happened and how I continue to make money this week. So, and it was honestly once I first saw these two do this. I didn't really get any trades on this because at first I was too scared. I did put like a limit down here. I think I put it below here, to be honest, thinking that if anything, it would probably go lower, hopefully hit my entrance and go up, just because that was the support that I saw coming. It did not do that. Whatever. Kind of made me realize, sometimes you do have to have your limit a little bit higher, just so you know that you can get in the trade, but you don't want to be too high. You want to know exactly where that trade is probably going to take place, and take your chances from there. Right. So as this is moving up, right, I see this, and this is where I took my first trade. I see these two. We have, making the same highs. So I thought of that as, my resistance. I put my, if it would come up, put my resistance line there, and then I just waited, right? And then I put my entry just a little bit above it. And usually when I do a stop loss for this, I'll first do about 100 pips to see how deep it goes. If it does go deep, because I think this one happened. Yeah, it was early in the morning, so I was awake and I was waiting for this one. So it wasn't giving me those huge charges. It was more like one of those ones that I wanted to jump in. Because it wasn't getting to my level that I wanted to quick enough. That's another mistake you never make. If you have a level, right, that you see, and you want it to get to that level, don't force it. Don't make it jump to that level. You can't make it do that. You want to wait it. I actually did that this morning, and I'm not gonna lie, I did that this morning. I still came out okay, but I could have waited for a little bit longer, and I would have got a way better one. So wait for it, because more than likely it's going to happen. Because if it doesn't happen, then we're not confirming that this is a real trade, right? Because what could have happened is that this could have continued on northward, and it would have never came back down. If that happens, that's okay, right? But you don't want to, as it's going northward, you don't want to be like, well, shit, I want to jump in this, because it keeps going up, and then as soon as you buy, it comes back down, right? You want to have a level that you're comfortable with for it to come back down and enter. That way you can continue on. It wasn't too long after this trade, I was like, oh my God, yes, this is awesome. And I started seeing the pullbacks a little bit. So I got out, I was like, you know what? That was, I'm going to say 120 pips, something like that. What was that? 30, it was 32.82. 82 to 3,300. Is that what that is? 32.82 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 to 3,300. Is that what Yeah, I'd say 200 pips. It was a good amount. I remember that. Yeah, 152, something like that. Oh yeah, it was somewhere around there. I remember making 16 to 18 bucks, something like that off of it. And because I used a point one, I used a .01. I mean, that's all I used. I used 1.01. Used that, and I was like, oh my god, that was awesome. And then I, continued watching it, and I continued to do the same thing. Right? You kept looking for those resistance points. Right? So you see this, you're seeing these resistance points, you're seeing, okay. So I was like, all right, well, it looks like we have another resistance zone, and here, let's act like we're not even seeing what's ahead of us. We have another resistance zone somewhere through here, right? And actually, what I'll do is I'll just do a replay. So you're watching it. I'll probably speed it up a little bit. Now, one thing is that I'll go ahead and hit pause. So you probably could have entered there, after you see it exit and you see it dip down, get back in it, and then come back out of it. Probably could have entered there. That's one thing I didn't see at the time. To be honest, it was also because of the nature of the way it looked. You can see it was still kind of in consolidation mode. There was a lot of uncertainty of it. That's probably the reason why I didn't enter. I didn't know if it was going to go down, continue going down, or go up. I just know that we did have, some form of resistance line at that point. Right? But I still had my trade set there. And so what I did, I thought, maybe it could enter here. So that's where I set my entry. I set it above to this top line. All right, and I just waited, and I waited, and I waited, and I waited. And sometimes you wait a while. But eventually, I got that trade. Right? Did you see that? You find that spot. You find that one spot that you say, hey, this is where it's gonna enter. You because it's done it before, right? It has that support or has that resistance, right? It turned to support. It hasn't tested it yet. Wait for it to test, and it's going to test, right? If it doesn't test, it's not a new, support. However, or not, yeah, not a new support. However, back here, you can tell I had multiple times struggling trying to get past this resistance. So what's going to happen on the other side? It's going to struggle to get past it as well. So boom, I hit that trade. Right there is where I got out. And the reason I got out there before that drop, or that was the VWAP actually, that wasn't the drop. But I got out there, and the reason I got out there is because I did see the consolidation start coming. And I also I knew that the channel was coming, so I thought it's getting close to the channel. It could back off any moment. People trade off trend lines. Why not make as much of it as I can? Again, I only used a 0.01 lot size, only one trade. I started learning better as I went on. Again, I think it was around 30 through 45. I think is what I did. So -2 off of that. So yeah, 33 or 350. So made a good $35 off that one. Hey, why not? Um, so, and before, I should probably back this up. And as this is happening, I'm also watching what is going on. So, wait, where was I? I just hit this one, right? Okay, yeah. So, I'll go back, replay here, come forward. Now, as I'm also in this trade, I'm watching and I'm looking and I'm seeing, hey, it looks like we also have a new resistance. And it broke right through that resistance. Why is it not pausing? Oh, there it is. Okay, so I was like, it broke right through that resistance. So here is that resistance. So as I'm already actively in this trade, well, at this point I just got out, but I was already setting up a new resistance level. And I thought, well, this has to be it. So I got out of that trade. This time I'm thinking, okay, let's throw 2 lots in. Let's see what happens. A little bit faster here. I want to say I know I got scared at some point and pulled out, and I want to say it was that spike right there, because it kept floating and floating and floating with this resistance line. So I was a little bit nervous as I was holding it, which that's understandable, but I do know I eventually set a profit. I want to say it was 33.50. Yeah, it was definitely 33.50, and I got out whenever it smacked that 33.50. So it was right there. So I went from 33.35 to 33.50, 150 pips. Not bad at all. I'm not gonna lie. I could have held and probably got quite a bit more, but considering what I what I was going through is with it fiddling around, I was happy with what I had. Again, I had 2 lot sizes in there, so I made double what I would normally made, right? So now I'm sitting here, I'm going, okay, well, this resistance line, something's gonna happen to it, something has to happen to it, because it's been playing with it too much. I've already entered once. I'm not seeing another resistance line. Maybe there's one here, maybe there's one here, but nothing's breaking it, right? So, and then I see this come down, hit the resistance, and I'm like, okay, this one had a big reaction. It's finally starting to move away from it. I'm gonna throw an entrance right around here. I want to say it was 33.42.50. And what happened? I want to show you what happens when it gets there. You may have to slow it down really bad when it gets there, because it looks like it went. It looks like it went by really, really fast. However, if I can rewind this, was right here. But I do remember this one. The coordinates were 32. It was actually 44.50 is what I put in. Okay. And maybe we can get in on the 3 minute, maybe even the 1 minute, and play. Ah, shit, I hit the wrong button. I might have to go back to the 15 minute, find out where we were. Hang in here with me, guys. Another reason why I picked this 44.50, not only was it because it was up here, I thought it would, definitely get into the allow me space to get into the trade. This one was far off from where the actual last support zone was. So I thought maybe it was also going to do the same thing. It actually wasn't a support zone, but I also looked behind it, and there you can see there's also another, kind of resistance area here, resistance area here. So all those kind of came into play whenever I picked that 33.44.50. All right, so let's get back into that 1 minute mode. And let's hit play.
And so you guys have to, bear with me on these. And 1 minute at a time isn't the most exciting thing. But once it gets there, you'll see what happened. You'll understand what I did. Because what happened is it smacked that entrance. And when it does, I want to try to pause and find the 15-minute candle as to what happened and my reaction after that. I just don't want to go too far because then it's such a bitch to rewind.
So let me just fast forward this part whenever it comes to the actual releasing of this on YouTube.
Right, so here you can finally see it, start losing strength. You can see it down here too in the RSI. You can see it start losing strength. So that definitely, told me something was going to happen. We had some kind of reaction, and it was probably getting ready to fall anytime. It makes its way back up to the top of the RSI. And this is also got to consider what time of day it is too. So I want to pause that because right here is noon, right? So this is the perfect timing for those 4-hour candles. And I'm Central Time, right? So 4-hour candles fall 4, noon, 4, 8, midnight. Depending where you are, they're somewhere else. For some reason, these times they really have a huge impact. Especially those times when those candles change. Have a huge impact on, what's going to happen next. So, at noon is when we do see this kind of reaction happen. Maybe a little farther than noon, but there it is.
Starting to lose strength, you can see over in the RSI. Tries to pull back up. See, and there's those big booms I'm talking about. Boom. There's a big boom. Big booms up. This is when it's starting to get really volatile. See, and there was another big. See those thuds? Did you see big thuds? There's one right there. There's thud, 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 and right here it is. All right, so I'm gonna hit play. See that? It came way up before it decided to come way back down. So even though I had this, it came back up, and the 15-minute, what was that? Yeah, I want to say it wasn't a whole lot of pips. I want to say it was about 80 pips. But whenever I saw it come up, if I can, on the 15-minute, what it did is it hit and then it went straight back up, right? So all right, let's see if I can do this again. You can kind of see how it prints out. you can kind of see it, but when in real time, it's a little bit different. I probably should have done it a lot slower. Let me try to do it this time one more time. I'll try to get to it right where it was happening. So replay right here, very, very slowly. See, that's what happened. That's exactly what happened. It hit that entrance, it came all the way back up, and that's when I got out. So from 44.50 to 55, I want to say, it was suffered. Yes, it came back all the way up to like 55. Still got about 100 pips out of it, and then I got out. And the reason I got out was because it did make this huge this wick. Now SPX doesn't allow you to make wicks. It just doesn't do it. So what I knew was going to happen, and the reason I got out was because I knew it was going to continue down. I knew if I stayed in this trade, I was going to lose. So instead, I took my profit and I waited for the next entrance. The next entrance was going to be 32.28. I think I set it at 32.30, 32.29, something like that. 32.28.8, 32.28.7. I forget which number it exactly was, but it was one of those two. We hit play, boom, it hit that entrance. And the reason I picked that one was because that was the last support from the last one. It just nailed that entrance. Turn around. After that, that was the end of the day. And I held on to it. Well, all right. So for the first one, I had two positions, right? Got out of both of them. Second one, I had two positions. After it first went up, I think I got another 100 pips out of it. I got out of my last position, or got out of my first position, and I let this one go. All right. So this is when I started playing pretty much position trading, right? I started playing it smart, position trading, and this is what you can do. You can do too. And SPX does this a lot, and I didn't realize it until I started back playing, other ones from this. But the reason I'm wanting to show you this one is because this is what I actually did, and it's easier for me to remember and to explain on how you can do it too. All right, so now next, what do we have coming up? All right, so let's take a look. We have a couple different scenarios, right? We have this, right? So I'm still holding on to a trade, but I'm also looking for another entry, right? So that was my old entry. I'm done with that one. I'm looking for another one. What was it? I want to say it was here. I want to say it was on top of these. Yep, I want to say it was 33.46. I actually have it on my trading view. I documented this one as I was going along with it. I want to say it was 33.42 the first time, because I was hoping it would be right on this trend line. But as time moved on, I switched the idea and I moved it up to 33.46. Right, so let's start playing it. Okay, so this was the one that I actually had from TradingView. So this is my idea that I posted. what I thought was going to happen at this point, you know, and done a scenario what could happen, and then I expect I said I support line at 33.62. So it may dip a little lower, but that's where I expect my next entry. Couple of scenarios to think about. Blah blah blah. Then I say setting up future fib. You know, I started playing with it a little bit, and I say edit the 785 level, match my entry. Comment goalpost has changed since consolidation. 33.64 for entrance now. So my entrance was actually 33.64. It was above that line. So you can see it here, and then here when it actually happened. You can see how it hit the entry and then moved on. And then I show it again over here. So it wasn't below this little elbowish thing that I thought I had put. As you can see, I did document this, and it did hit that 33.64, which is my entry, and then the rest is explained in the video. Okay. Now, it's a lot of people I know were playing the sell. They were playing the sell. I'm bullish on this. I am not looking for sells because I don't know if it's going to do this, exactly this, turn around, go back against me. It could go all the way back up, you know. So I am not looking for a sell in SPX whatsoever. I am looking for a buy. I'm at 33.44. This is at 33.46. No. Did I change? Hold on. I'm trying to think about this now. It was 33.56. It was, yeah. So I changed it from 33.46 to 33.56, and now I changed it to this. I feel like I gotten that one. Maybe I changed it to 33.58. That was toward the end of the day, right? Yeah. Okay. Oh, never mind. That's right. I did get in this one. Because I still left it there. Now, the thing was, what I was scared of is that after it got in the channel, right, it broke out of the channel to get into this trade that I got in. So that kind of scared me. I was afraid it was going to come. There's two things that usually happen, right? It bounces back off the channel, or now the channel is just no longer there. So I was a little worried. I'm not gonna lie. I had two positions. I closed one right around here. Wasn't, I want to say, by probably at another 10 pips or 100 pips or so. Oh yeah, it's probably like around 150. At this time I'm using a little bit larger lot sizes. I'm using 0.5 or sorry 0.05, 0.07. So I've gained confidence. I'm adding the lot sizes because I've been adding the money, things like that. So I had a fairly decent lot size here. Took it out at about 100 pips. I left another one running, and I want to say this is early in the morning. Yeah, that's right. Because I have a habit. I wake up 3 o'clock. Sorry, 2 o'clock, 3 o'clock, 4 o'clock, 5 o'clock. I wake up every hour on the hour. If you don't believe me, I'll even show you my phone and my alarms. On my alarms, if you can't see them, 2 o'clock, 3 o'clock, 4 o'clock, 5 o'clock. So I get up every hour on the hour just to check trades, right? So whenever I woke up, it was that my 3 o'clock one. I had noticed that it was nearing my entrance, so I was able to catch it, and I unfortunately stayed awake throughout most of the morning, and I got a little bit of more of a nap in after I let this one go around 6:30. So I let this one go around 6:30. I put my stop loss to break even for my second lot that was running, right, and just left it running, right. So at this point, let's let it run a little bit. I'm getting ready to go to work. Everything's going good, and then I get to work. What time is it? Well, hold on. Let me pause this really quick. Okay. I'm gonna put a vertical line here because this is the time when the market opens, 8:30. After I let go of that by by hour and a half before I have to get to work. I have to get to work at 8. I then notice, I'm getting really close up on this, and I see a bull flag. This has nothing to do with resistance or spotting those key resistance zones, anything like that. This has to do with just other basic fundamentals. So I notice this. Let me pull this off of here. And before the blue line, spread it out a little bit. So before the blue line, I should say, was even there, what I had personally saw was this. God damn it. So I see that. So just imagine that this part isn't even here, right? You see this. I see the bull flag, and I see the bull flag that's entering the channel that is on top of the channel again. So I'm thinking it's going to go along with the channel. So what do? I enter as a buy. I entered late though. I entered at 3368.3. I entered right there. Option horizontal. It looks a lot worse than it looks a lot better than what it actually was. I feel like it was a lot worse than that, but no, that's where I entered. So I entered there. Actually, let's go back and do another replay because I want to do it on the 1 minute. Auto. Play here. All right, we got the bull flag. Gonna hit play. Gonna slow it down a little bit. Yeah, it was right around. Well, yeah. It was at 3368 is definitely where I entered because I didn't think it was gonna go below the the line, but it did. I got a little squeamish there for a second, but I gave myself a 100 pip stop loss. But this one I just let go for a little bit, and it dipped down again. I remember the dip down again because I got a second entry. The second entry I did get at 33.65. Or 33.67, something like that. It wasn't too far below my first one, to be honest. I have it documented. I want to say my first one was 33.68.3, and my second one was 33.67.2 or something like that. Now the good thing is that these got up to 100 pips, or 50. I want to say no, they each got up 50 pips. So when one got up 50 pips, I took profit. I took half of what I already had, and that happened the first time. So from this one to here was 50 pips. When I entered again, and this one got up 50 pips, I took another 50 pips. It was probably somewhere right around here. And then once I saw this, I was going to take profit. I didn't. I saw the second one didn't get nearly as high. Well, it got close to it, but I was literally watching it, and I saw it struggle even get that high. So I literally took my profit right there, pretty much at that high of the second one. So right around here was where I took all of my profits, except for I left two lots running on each position. And I had put my entrance, right? So I'd put both of mine stop losses to my entrance. First one got stopped out after I took out that. Second one actually didn't. It was just above. It was weird. It was just above. I feel like it was. I don't know. I know I didn't get stopped out though, or maybe I left it. I think maybe my second one I left. Yeah, I think that's what it was. I think the first one, for some reason, I decided to want to break even. My second one I left down. Kind of hard to recall whenever you're doing so many things. But I just left it, to be honest. I left it, and I should have took profit again. I honestly thought I was going to continue going up, but that's not what happened. Unfortunately, I did get taken out. See, they had all this chance. So I acted too early, to be honest. It's just funny because now that where I took profit from that, the very last time, ended up being a resistance point almost. But at this point, I have one lot left running, right? And it's this low position. And I'm sitting there thinking, I'm just like, hey, I'm going to hold on to it, until next week, is what I'm thinking. And I could have took profit at any time through here, but instead I let it hit. Because I at that point, with it being so high up, I did, put it to break even. And that was it. That was the end of my week. So, I don't know if that helped you guys any at all. I really hope it did. But it was just showing you guys how easy you guys can play the SPX. It's literally support and resistance, and finding that sweet spot that you're gonna hit, and just wait and wait and wait and wait and wait if you have to. That last trade I made on the bull flag, that's just something I did because, okay, two reasons why I did that. Well, for one, here, let me go ahead and stop this. Not only was it the bull flag, but also what I do, and this should help you as well, draw a vertical line, right, between the breaks, the day's breaks, right? So here is, Let's go to 15-minute, make this a little bit more doable. So for each day, like the New York session, right, you want to have the break there for the New York session, and then you want to have the end of the New York session as well. So here I want to say is the end of the New York session.
1600 goes by 1600, 1700, so that's the 10. So put a vertical line. Alright, so now you know in between your two sessions. What you want to do is for your sessions is you want to, oh no, here's the other New York session right there. Alright, so this is New York session. You can keep doing this for as long as you want. I'll just do the last couple days because that's when I'm going to get rid of some of these lines too. Because knowing where your highs and your lows are what is going to help you determine some things, right? So, also, if, like, let's say you before New York session, the end of it is here.
Okay. So what you want to do, you want to put your highs and your lows, right? And one of the reasons you want to do that is because they're the previous highs and previous lows of the previous day. And the reason you do that is because they do act as support and resistance. So there's the high for, and even this one too. All right. So, one of the reasons when I jumped in here, for not only was it the bull flag entered the channel, but I also knew I had more than 100 pips before it was going to hit the resistance line from yesterday's low. So, I knew if it went past yesterday's low, it was going to continue going downward. You do a 5-minute candle, right? Watch the 5-minute chart. If it breaks below the low from the previous day, it is going to continue going lower. That is a trick. I'm not lying to you. It happens all the time. It happens on NASDAQ. It happens on the Dow. It happens on SPX. Okay, so, and generally it happens at the very beginning of the market. This is another clues I'm going to give you. So at the very beginning of the market, what the banksters like to do, they sell to buy or they buy to sell, right? So at the beginning of the market, I saw the bull flag. It was immediately starting to sell as soon as it opened. We were pretty far away from the yesterday's low. I didn't think it was going to make it down there to be a support. So I went ahead and I early bought because I knew eventually it was going to buy. It didn't buy as much as I liked, but I did come away with quite a bit of money, just because I had a couple positions and I took profit at some decent positions. But the sad thing is that if you look a little closer, I could have waited. Right, I got a little bit too greedy. I entered in too early. I entered in up here. It did come down and hit this previous resistance, right? And that's what it'll do. It almost does it every day. You will find a resistance line that it's going to hit, and then it bounces right off of that. So if you can be patient and you're close to that resistance line, or if you're patient and you see those big thuds and you see those thick candles forming and they're getting close to the previous day's low or the previous day's high, and a 5-minute candle closes below that low, it's going to continue going lower. There's no ifs, ands, or buts about it. You can enter at that point if you want and wait, right? And then it's going to continue going, and it's up to you. Be careful with it because it may not. That's at least probably going to go at least 50 pips. It could take a while to get there. It could take half the day to get there. It could take 20 minutes to get there. Who knows? But the matter of the fact is, and I want to say 99.99%, if it breaks below that, yesterday's low and a 5-minute candle and closes, it is going to continue going lower, because I've made trades that doing that too. Now, what I have personally done when I've made those trades, once it breaks below and it closes, wait, because what's going to happen is you're going to see that pushback. You're going to see it come back up above that resistance line, and then that's when you sell. You wait until you think it's probably going to get as high as it's going to get, and then you sell, because then it's going to push through, and it's more than likely going to push through until the next resistance line. And that's why I usually have 2 drawn, because I know at least it's going to go until the second one. That way I can take my first profit. And if it moves on even more, then, you're going to have to look at the next days, So, unfortunately, they had 2 resistance lines. It could have went down to here, And then, that's why I usually always have a couple positions running, take profit at one. It's next thing you know, it's going to be down to this one. If you've ever seen it drop, SPX drop, you know what I'm talking about. It'll always hit those resistance levels. Now, when it does it is on the 5-minute chart, and it breaks a previous day's low, whether it be the previous day's, actual low during the trading hours, or if it's the low of the non-trading hours. So this could be opposite, right? Like this could be here and this could be here, but if the low of the non-trading hours, if it still breaks that low, it's gonna act, it's still gonna do the same thing. It's probably just gonna move downward and hit that resistance. Now, more than likely, it's gonna stay at that resistance because that was the actual yesterday's low. It's gonna be a little bit tougher for it to go further, but when it's non-trading hours resistance, more than likely it's going to end up going further. So if this were going to break this low and close, which it did not do, because I was sitting here watching it, and I actually made a little bit off the end because I was watching this really, really close. I even had the number. I forgot exactly what number it was, but I had it on my MT4 looking straight across. And as soon as the clock turned, I want to say it was at 55, something like that, 45. Yeah. I'm gonna look at the 5-minute because it was somewhere around 50, 55, something like that, where it didn't close. 50, yep. So it was at the 250 for me, 250 time, and it looks like it closed, but it actually didn't. On my MT4, it didn't close below that resistance. So as soon as I knew it didn't close below that resistance, I bought. It shot up, and as soon as it hit the trend line, I got out. So that was, I forgot how many trades I had made just yesterday. There was 2 off of this one. I think I took profit 3 times, ended up stopped out, and then I took one last trade there. So there are many, many, many ways that you can trade the S&P500. A lot of it is just knowing your support and resistance and knowing how the S&P behaves. If you get a chance just watch it, just to watch the S&P, because you'll see what I'm talking about. You'll see what I'm talking about when you see the big thuds of these things coming down, right? And anticipating where it's going to hit, right? And if it's going to hit there, it probably is, like you see here, there's you got this resistance line, it moves upwards. And then that's just the banksters waiting, it thuds, they sell, the banksters wait, because people are like, oh yes, it hit the resistance line, let's buy. And then as soon as they do that, the banksters say nope, and then they start selling again, and they take the retail people out who are sitting here trying to buy. So if you see that happen, if you get caught in that, you set a buy here, and you do buy, and you see it kind of start, moving up a little bit, Be careful. I won't say jump out immediately, but always have that notion in the back of your head, and hey, this can turn around and come back on me, and it can come back on me quick. You can kind of tell just by the way that the candles are moving, right? If they're moving aggressively down and then all of a sudden they let up, close it out, because they're going to come down aggressively again. But if it's like this, and they're just kind of toying around, and eventually, like, it kind of gets down there really quick and then it comes back up, more than likely it's not going to come down. So you can just tell in the way the candles act and the way the candles move, because you can see these are solid candles. This is full volume candles, so you can tell there was a lot of power behind this, until it reached that resistance zone, and then it just let off, and it was like, okay. And it does that to let retail buyers get back in there and be like, oh, this is the resistance point, let's buy, and then they turn around and they go nope, and then they sell right back at you and they take you out. So that's what they do. So be careful with that. Be careful around those resistance zones, or support zones. Again, watch how the candles form, around them, because that is going to give you your biggest clue on if you need to get out or if you should stay in, right? That's going to be your biggest clue. Like, again, whenever I got in this one, I got a little worried, but knowing that I could kind of tell these were coming quick down to this, to the support. They weren't sitting there holding and then going down a level and then down a level and then down a level. That's what you're going to see whenever it's actually going to break through a support. It's going to hold and it's going to push down. It's going to hold and it's going to push down. If it's going to just kind of stay above that support, you'll be able to notice it'll kind of teeter and totter, right? Now I'm hoping I'm giving you a lot of knowledge on the SPX, because again, I've been watching this for weeks upon weeks. I've understood how it moves, and I understand what it can do. I understand how it can rip your heart out too, because I've made some dumb moves, like when it came down and I'm thinking, oh yes, that's it, that's the support, I'm gonna buy, and then it turned around and just take all my money. That's happened to me so many times that now I've learned. I know how it works. I know how it moves. Be careful, because when it comes down with a vengeance, it's gonna let you think that you have the upper hand, and as soon as you think that, it's gonna turn around and take that hand from you. So know when to get out of the hand before it does. All right. Okay. Anyways, I just wanted to go through a lot of that with you, because I feel like I hope that I could help somebody win some trades, especially in SPX. Again, the reasons why I like SPX, it's not a huge volatile indice. It's like the Dow Jones on volume or something like that. Again, low entrance barrier. Hey, if you don't have a lot of money in trading, that's fine. Start off with a paper account. Start off with a demo account. Practice some of these techniques. Watch the S&P. Take these notes. Take some notes that I've been saying down, and practice them. And if you think you really got it and you only got $20, put it in your broker's account. I know Hugo's way will definitely let you, and if you don't have an account, I'll link you to something. That way you can get started. If you don't know how to trade and you want to learn how to trade, message me, put a comment. But this is what I suggest, especially for especially when you're a beginner and you want to make money and you want to make money quick. You're not going to be able to make a lot of money quick. However, you're not, especially hundreds and hundreds of dollars a day, you're not going to make that kind of money. However, this is what I have found to be the best way to make, a good amount of volume of money within, a short period of time, versus, trading 3 or 4 different pairs at the same time, that you're getting from different signals from everywhere, and you don't know, what the signals even mean. You haven't even looked at the chart, things like that. Things like that are, can really kill you in the market. So take something, yeah, you can, if you want to, study, GBP USD all you want, and use Fibonacci's instead of support and resistance lines like I do, because that's probably how you're gonna find that that way to make money easy. Just use larger lot sizes and stuff like that. Find your way of making money the way you want to. Don't have other people tell you how to make money. That's what I'm trying to say. I've been following so many people on Telegram channels for so long, and it's done nothing but get me in trouble. I haven't, believe me, it's a headache. It's a headache. I tried following one person, for a little bit, and paying for their services. I didn't like his style. His style was horrible, actually. And then, like I said, I dealt with Wizard. Wizard is a good trader. He really is. But he just changes things really quickly. He won't communicate for hours upon hours. And some are just signals, and then some will end up being live trading. You don't know what's going to happen. He won't tell you. It's just going to happen when it happens. So I don't like the inconsistency of communication with Wizard. So sorry, Wizard. I know my subscription is up, but I'm not joining back with you. Did me no good. Plus, he did a lot of trading on the UK market, which is fine. But I have to sleep. So if you are gonna try to find somebody out there, that there's a couple different things you can do, especially if you're a beginner trader. You can go to Tradara, or you can do IML. Those are fairly decent from what I've heard as far as starting to getting trading. But they also want you to get people to sign up, so you can make more money that way. Don't let that part consume you. If you want to be a trader, just learn how to trade. I would also suggest Ronin. His name's Ronin Forex. Ronin Forex. You can look him up on YouTube as well. He has like a one-on-one mentoring program. I'm definitely considering him, especially once my account gets built up enough to where I'll be able to be like, all right, Ronin, I can afford you and still do what I need to do. He isn't that much. He's only $200 right now, but 200 for me is quite a bit. I got a lot of bills I got to pay. Yeah, and I'm not for sure where I was going with that, but yeah, there's some other one-on-one people out there that are good, but my personal advice is find one specific thing. My thing is SPX. Again, just study it, learn how it moves, know those little tricks that I taught you. Watch how it moves in the morning. The first thing, they sell to buy and buy to sell. If the first thing is a thud down and there's no resistance or support nearby, more than likely it's going to end up buying. Just wait a little bit and then just watch it buy. If it gets near the support, see if it's going to, close below it on a 5-minute candle. If it is, it's going to continue selling downward. There's little tricks like that you'll learn, once you, watch this and you're and play in this market enough. Some people end up, buying, selling, buying and selling, throughout the whole time. If you get that good, that's great. But to me, I'm just bullish on the SPX. I'm not much on selling it. I just want to try to find, buy entries. And so far, that worked very, very well for me these past 2 weeks. It worked so well that my account, I've lost hundreds and hundreds of dollars doing this so far. within the past 2 weeks without taking a signal, doing only SPX on my own. I've made well more than I made my money back plus about 3 times that amount. I'm telling you, and this is why I suggest, especially for beginners that want to, it's not a get-rich-quick scheme, but you can make a decent amount within a very short time. It's going to take some work. It's going to take a little bit of practice that you're going to have to put in. It's going to take some studying. It's going to take a lot of watching. If you want to, go back and replay like I did, or just replay, the chart as it moves. Watch it, see if you can, test some of your own theories, and see if it works, and then move on from there. But I hope this brought some information to some people. I hope that you can definitely take something away from this. I hope you guys can make some good trades. If you do, I'm probably going to dedicate my channel specifically to SPX from now on. So if you guys have some trades that you guys want to share with me, have some ideas, if you guys, if you want to reach out to me and start our own little Telegram group to where we only do, SPX ideas, I'm down with that. Let me know. I think this is a great indices, and I think there's something that we can all learn from this. And with that, I will be out. All right, guys. It is August the 14th, Friday night. It is, Saturday morning now. It's 1:30 in the a.m. Thank you guys for watching. Thank you guys for listening. And have a wonderful weekend. I'll see you back here Sunday. And maybe we'll catch an SPX trade before the week starts.